All right, it is 10 a.m., so we will go ahead and get started here. Caitlin, if you want to take it away.
Thanks, everyone. Welcome. We're excited to be here together. Haney and Now CFO. I'm on the Now CFO team, and we're just excited to present this information. A couple housekeeping things that I'd like to share with you. Like I mentioned previous, if everybody can please mute themselves, that would be great to avoid any buffering or any lag in the video. We'll be taking questions through the chat. And so if you have any questions, please message those to me directly. We will save them all for the end of our Q&A. We are recording the video and we'll send out a copy of the slides along with the recording for you to watch and refer to later on. Without further ado, I'll turn it over to Chris and Scott.
Hi, everybody. My name is Scott Frederickson. I'm a partner with Haney & Company. Thank you for taking some time this morning to learn a little bit about, now that we have received some of the stimulus money, how do we spend it the right way in order to maximize forgiveness? Chris Badger is going to join me from Now CFO. Chris is going to talk a little bit here at the beginning, and then I'll kind of go through the calculations after that. Chris?
Awesome. Thank you, Scott. We're glad to have you all on here this morning. And so we're going to kind of go over the PPP forgiveness program, at least as it is known right now. Remember, the SBA through the Department of Treasury is going to continue to give us more guidance, but we're going to go through what we know as of today. So just real quick, realize that we're just trying to get the best information out because some of you have already received the funding and that 8-week time period is starting to tick. We've had some companies that are already into the middle of their second week. We're just trying to help companies get the information out so they can put a good plan together so that they can get hopefully all of that loan forgiven, or if not all, at least most. But realize that Now CFO and Haney, Haney is a professional, the best professional CPA firm in town. Now CFO, we're an outsourced accounting, and we're just trying to get the right information out. So anyway, and we'll continue to do that here over the next couple of weeks as more information becomes available. Before we jump in, obviously what today, the new normal, is not what the normal was 2 months ago. I'll be honest with you, 2 months ago, if I had a client said they were going to go through the SBA and get a loan, I would just cringe and I would say, guys, it's going to be a long, painful experience. And by the time you're done with it, you'll be happy you have the money, but you're going to be personally guaranteed for it. Well, that's all out the window now. And the new PPP program has actually been a pretty neat thing so far for a lot of companies that have received funding or in the process of receiving funding. So this PPP program, obviously, it was signed into law on March 27th with President Trump. It's part of the COVID-19 reaction, part of the stimulus package. The original tranche was $349 billion. There's additional money that hopefully the House of Representatives will be voting on today, and so there'll be more loans coming out. These loans can be up to 10 million, but remember the maximum is 2.5 times your average monthly payroll, okay? But up to 10 million, and there are some companies that fit the Small Business Administration's definitions and have received that maximum amount. It was interesting to see in the news yesterday, actually the day before, that Shake Shack, they received the 10 million, but they're going to send it back. So I'm not sure if that was a big publicity stunt, but anyway, this PPP program is actually pretty neat through the SBA. Some of the things I want you to think about as we go through this presentation. So I'm going to do a little bit upfront discussion on expenses and other things. And then Scott's going to go through your actual calculation and how you're going to calculate that forgiveness with the 3-step process. But one of the things I kind of want to highlight for you in this PPP program, throughout the language for the expenses are incurred and payments made. And it doesn't say accrued, it says incurred. Is that the same as accrued expenses in accounting speak? Could be. We're not really sure. We need a little bit more guidance on it. But the payments made, think of it as cash out. If you have, if your 8-week spending time limit or time frame has started, and at the end of it, you're going to end up with accrued payroll, that's probably not a good thing. You're going to need to make that payment in order to get the forgiveness. So as we go through, remember for expenses, it's incurred and payments made. Okay, so think cash out. Scott's one of the best tax partners I know, and so one of the questions everybody's like, well, we're going to get this loan forgiveness, and then are we going to be taxed on it? Is it debt forgiveness income? And it is not debt forgiveness income. It is specifically stated in the CARES Act that it is not taxable. Okay. The question then comes up, is that the expenses you pay with it for the payroll and utilities and rent, can you use that as a tax deduction? And right now, yes. There are some people thinking that there might be some more guidance on that later, but right now there's nothing in the CARES Act that limits you on that. So obviously plan on taking advantage of that. Also remember, this whole forgiveness process, it's going to go back to the bank or the lending institution where you've gotten the loan, okay? So after the 8 weeks in your spending period is up, you'll be sending in certification and backup with your bank or lending institution for that forgiveness process. And that bank or that lending institution may give you more requirements than what we're going through now, but remember, it's going to be that bank controlling the process. So let's go through a little bit with the PPP program. Originally, this PPP program was set up to pay working capital expenses. Those working capital expenses include payroll. As part of payroll, that includes health benefits, okay, as well as retirement benefits. So I think health insurance. It also includes mortgage interest on a building or mortgage interest on your office space. It also includes rent payments, lease payments. In the CARES Act, it was not specific for real or personal property. And so a lot of people were saying that also covers rent expense on equipment, okay? Other interest payments, utility payments. Utility includes, think water, power, electric, heat, and also transportation. And so all those utility payments are approved expenses that you can use with the PPP loan program. One thing to keep in mind for all of these other expenses, right, you had to have a contract or had to have been something you had already set up prior to February 15th. And so under this loan program, you can't set something up here in April and have it covered as one of these approved loan expenses, okay? So these are all for, think contracts or something that you had in place prior to the February 15th timeframe. Now, when the PPP loan actually came down through the SBA after it was approved by Congress, okay, one of the guidance issues that came out a week and a half ago is that for this loan, and this is specifically on the forgiveness part, at least 75% of the loan has to be for the payroll cost to be in order to be forgiven. That wasn't clear in the CARES Act. You won't see that in the actual bill. It's in the SBA and Department of Treasury guidance. So 75% payroll. That payroll expense includes your health insurance and retirement benefits. The other 25% is what can be used for rent, interest expense, utilities, okay? So as we go through this, and Scott's gonna go into the detailed calculations, remember that 75% and 25% rule. Let's talk a little bit, when we talk about payroll, how we're gonna calculate this eligible payroll cost that can be forgiven, okay? Throughout the CARES Act bill, the employee compensation is capped at $100,000. And so if you're an owner of a business and you are taking a salary out of $150,000, you don't get $150,000 forgiven, you get up to $100,000, okay? The payroll costs in general, think of it, anything that's gonna run through on your W-2. And so that also includes payment for PTO, vacation, separation or severance agreements. Again, your group healthcare benefits, so insurance premiums on health insurance, any retirement benefits, which would include matching for 401k or profit sharing, okay, any type of qualified plan. And then also in this amount to be forgiven are state and local taxes that are assessed on employee compensation that the employer is paying. Not state withholding, but state taxes that are paid by the employer. And every state's a little bit different. You'll also run into different cities that have head taxes that would be included with that. Some costs that are not eligible, that are not included. Think of, well, anybody that's outside of the US. So if you're paying an employee who's in Canada, guess what? There can't be part of this forgiveness piece. Payments that you're making to independent contractors. In the guidance, they came out specifically and stated for the forgiveness part for the PPP loan, no payments for 1099 contractors are included with that. And then you don't include your federal unemployment tax, or excuse me, your federal payroll taxes. So think Medicare, FICA are not included with that. Or any family or sick leave wages that were under the family's first Corona bill, okay? So those are payroll costs that will not be included in our forgiveness calculations. Now, as you think back what we've talked about with payroll and then these other expenses, I want you to already start thinking in your mind, you know, what's the backup that you're going to have to provide for the bank to easily accept your expenses and have them forgiven. So I want you to start thinking of, well, for wages and payroll, I'm going to need my payroll tax filings, okay? I'm going to have all my employees' pay rates, all the state income, payroll and unemployment filings that we have there. For the other expenses, for rent, utilities, and interest, you want a third-party invoice and a copy of the check. So think of it, you're going to document, okay? Another thing to keep in mind here, remember this forgiveness process is going to go through your bank or your lending institution, okay? The banks themselves do not have to certify or come out and audit and make sure that those expenses are good. The officer of the company or whoever's signing on behalf of the company is going to certify that those are true expenses. The bank just needs to look at them and accept them, okay? So remember, through this process, document. One last piece before Scott gets into the calculations and stuff. Throughout the CARES Act on the PPP, there's this, they don't want anybody double dipping. And so remember from one of our previous webinar, you couldn't take out a PPP loan and take out a disaster loan and then use them for both for the same payroll expense. Okay, so you can't double dip. That includes some of the credits that are also available through the stimulus package. And so there's some employee retention tax credits. I've had a couple companies look at that. Every client that I've worked with has gone for the PPP loan money. It's much more meaningful to have cash in the bank than a credit possibly at the end of this year or the end of next year. But realize that if you take the PPP loan, you can't use the cash from that for payroll that then you're going to try to take credits through the payroll tax credits, okay? So just remember those things are out there, no double dipping. And with that, let's, another little disclaimer. Remember, the Treasury Department is going to issue some more guidance. They've promised it, just haven't seen it yet, specifically on the sharing piece of the debt. And so with that, we're gonna turn some time over to Scott to take you through the calculations. And Scott, you've got the helm, you've got the control.
Thanks, Chris. Let me turn this slideshow on. Thanks, Chris. And just before we get going, we're in unprecedented times. We've received this money, but we really haven't received guidance, specific guidance on how we're supposed to use it. We received guidance on how we need to apply for the money, and so we're going to be talking today about the guidance that was given while we were all scrambling and trying to secure these funds. We believe the SBA will come out with some additional guidance. However, as we're spending this money, we want to spend it as close to what we believe is the right way to spend the money so that it's completely forgiven. I'll put one other note. There are companies that have decided it's better to use this money for other things rather than payroll. It's a 2-year loan at 1% interest rate. So it's in essence, it's almost free money. Now, they know that if they don't use it the right way, it won't be forgiven and does turn into a loan, but that's a strategy that we can look at, and we can talk about that offline. But today we're going to talk about how do we get this loan forgiven. There are a couple tricks. So as we went out and we secured this money, we went and took the average monthly payroll of that we had in 2019, and the government turned around and said, okay, here we're going to give you 10 weeks of payroll, which includes 8 weeks of the amount they want you to continue to pay your employees, and another 2 weeks of payroll to be used for rent, insurance, utilities, what have you, to basically enable your employees to have some place to work. So the forgiveness piece is twofold. One, they want to make sure that you keep the same number of employees that you had during, before the coronavirus, or the same time period last year. They also want to make sure that you're paying those employees the same amount as you were paying them before. The requirement is that you pay the employees at least 75% of what you were paying them before the coronavirus happened. I'm going to show you a couple calculations. We're trying to make it really simple. Really, one, what's your total costs? What's your head count? And what's, if any, do you have a salary reduction? So to figure out, first of all, your allocable costs, as Chris talked about, 75% of the funds that you received are supposed to go to payroll. So that includes cash payments. It includes health insurance and retirement and state payroll taxes if you've paid them. Yeah, it has to be paid. We've seen a lot of health insurance companies take big hits. Employers are continuing to pay employees. However, maybe they've dropped the healthcare coverage piece just to try and stay in business for a little while. So if you're going to pay the health insurance piece, that will qualify, but it does have to be paid. And then the other 25%, like Chris talked about, will go to this mortgage interest or rent and utilities and what have you. So when we're talking about the full-time employee count, we're looking at the count from February 15th, 2020 through June 30th, 2020. If you've been in a position where you've had to lay off employees or you've had to furlough employees during this period, which many companies have, you have until June 30th to make that rehire. So if you had 100 employees that we looked at from 2019, or we looked at it from January 1st, 2020 through February 15th, 2020, and you've had to cut back to 80 employees, the measuring date is June 30th. So if you rehire those 20 employees that were furloughed by June 30th, that's going to give you the head count qualification. You're going to meet that qualification for to have the loan forgiven. Also, if the salaries have continued to be paid dollar for dollar, again, you have until June 30th to pay those employees. However, if you've had a reduction, or if you've had a reduction in headcount, or you've had a reduction in the amount that you're paying those employees, that portion will not be forgiven. So if you were paying somebody $10 an hour and you've said, hey, we're gonna cut you to $8 an hour during this time, that 20% will not be forgiven. We're going to go through a couple of examples as we talked about when we were going to get the money from the bank. We looked at what was the average monthly payroll in 2019. We're still going to compare that. The calculation is still going to be compared to what happened in 2019. However, there is a seasonal clause, and for seasonal businesses, it may be more beneficial to look at the calculation from February 15th or March 1st, 2019 through June 30th instead of the entire year of 2019. Or we can also measure against January 1st, 2020 through February 15th, 2020. So it gives us a little bit of room to play. So if you have less employees during this period, rather than the average of all of 2019, we would want to look at these numbers. Seasonal business is not defined by the SBA. You can just make the seasonal election. So one of my clients owns 50 Wendy's franchises. Wendy's, it's better for them to take this seasonal approach than it is to look at the average of 2019. I have another beer distributor who sells most of their beer during the summer. So it just so happens they are seasonal, but they're going to take the same calculation, which is more advantageous than looking at the entire 2019 calculation. So for these examples, we're going to go through the seasonal calculations for you. So first, how do we understand, how do we look at a headcount reduction? Well, you take your total allocable costs that we talked about. You multiply that for the full-time equivalents employees that you have for the 8-week period, and then you divide it by the 8-week period that you've had those funds. Just to remind you, the 8-week period begins as soon as you receive the funds. So if you've already received those funds, the 8 weeks has already began. Salary reduction calculation. If you have employees that are making more than $100,000, anything over $100,000 does not count towards the forgiveness. So if you have an employee making $125,000 annually, that $25,000 is not going to be forgiven. You are still going to be able to have the $100,000 forgiven, just not the 25. Also, on top of that, and we talked a little bit about this, any wages that are cut in excess of 25% will not be forgiven. So you can make salary reductions 5, 10, 15, 20%, and still be able to have the loan forgiven. But if you cut more than 25%, the eligibility of the forgiveness for those employees specifically is gone. So everything we've talked about so far is how to calculate from a payroll standpoint. That's for companies who have payroll. That was what the traditional PPP was provided for. A couple weeks after the PPP loan came out, the government also issued guidance for self-employed businesses. Self-employed businesses that do not have employees who are paying themselves are reported on your tax return on Form Schedule C. So how do we figure out? So we were able to go get money for the Schedule C clients who pay themselves. And so how do we determine that calculation? Well, we look at the net income from your business. We multiply that by the 8-week window, and then we divide it by 52 weeks a year. That amount is the amount of loan that was eligible for you. It's also going to be the same amount that will be forgiven. So it's going to look at your profitability as both the amount of money that you would receive as well as the amount of money that will be forgiven. So in essence, what the government is trying to do is they're just trying to help people get through these 8 weeks, and they want you to continue business as normal. Any change in business, any reduction in employees, any reduction in pay, they're not going to forgive that. They just want business to keep going as normal. Chris, do you want to finish this?
Yep. Thank you, Scott. As you can tell, some of these calculations for different companies can be very complicated, especially if you have companies that are very seasonal. We've helped out with some different restaurants. We had some ski rental businesses that, you know, are going into their real slow season stuff. And so we're just trying to help maximize. And obviously new stuff keeps coming out every day, every other day. So just keeps coming and coming. Let me kind of talk a little bit and set up a couple of things that Scott's talked about, and then a couple things, as Scott mentioned there, one of the things where you can get the maximum piece and be eligible for the forgiveness without having to lose some of that forgiveness due to headcount reduction or salary cuts is that you restore everybody by June 30th, okay? For some companies, we don't have the all clear yet, right? You know, in the state of Utah, they're thinking of a phased return starting on May 1st, right? But some people are already a week or they've already passed their first week of timing. And so you've got to try to figure out how you're going to use that cash here over the next 8 weeks. Okay. So again, sometimes for some of the companies, it's going to be a phased coming back into normal. And, you know, one of the strategies you might have is to try to have everybody restored by June 30th. And then that way you don't have to take any reduction of your forgiveness. So that's one of the plans that you might want to take into account. Some different tracking strategies. Now that you've got the loan set up, you've got the funding, let's try to figure out how we can help you get the maximum forgiveness. So again, you know, planning, you know, and then plan and model some more. So if you've got the funds right now, you know, you've got 8 weeks, you know, plan it out right now. When you're in the 7th and 8th week, that's not the time to be planning. So let's go ahead and let's plan this out and help you maximize what you're going to have forgiven. Okay. Remember, some of you might have idle loans, the disaster loans in place. Make sure you're tracking those separately and that you don't commingle or cross over. Remember, with the disaster loan and with the PPP loan, you can't use them for the same expenses, okay? Make sure you've got set up in separate accounts and you're not commingling them. Make sure what I would do is for the companies we've worked with, we've helped them set up separate PPP accounts. So on the loan balance sheet side, we've helped them set up the PPP loan. And then we've also had them set up a separate cash account for those to keep tracking. The other thing you're going to need to make sure you've got a good list of is all of your employees, the start dates when they started for all of 2019 and the different wage levels, and then your current list of employees, because you're going to have to look at those to see which test you want to go through. I would go ahead and set up a separate think of a little data room that you're going to put all your copies of your payroll filings and your payroll reports here over the next 8 weeks. So one place, one separate secure subdirectory where you can keep copies of all the invoices and checks and expenses as they go out. And make sure on your balance sheet and on your income statement, you track the PPP expenses as well as the PPP loan amounts and the cash amounts. Remember, you have a maximum of 25% that you can use for mortgage interest, rent, utilities, and other interest payments. Remember, that has to be for debt prior to 2/15 of 20. And remember, all of those utility payments and other things have to be for contracts that you had prior to February 15th. At the end of this, we're going to be sending you out a copy of the slides, and Amy's put together a neat little tracking Excel spreadsheet and we'll send that out here to everybody that signed up for the webinar. And so make sure that you're tracking everything kind of week by week. And in your subdirectory, you're going to keep copies of the invoices, so third-party documentation, and make sure you've got all the payments easily labeled so that you can keep them all set up. They're all in one place. And at the end of the 8 weeks, when you have to send this all to the bank, it's an easy upload and it's an easy set. You want to make it very easy for that bank to give the approval for the forgiveness. Again, some of the other third-party documentation that's going to be really great. Obviously, any of the IRS payroll tax filings you do, mortgage and rent agreements to show that you have those in place prior to February 15th. Utility accounts, make sure you've got those in the business name and you've got invoices for those. If you're a sole proprietor, you've got your 2019 tax return, because everything for you is going to go off of that Schedule C on your 2019 tax return. And I'm sure Scott can help you out and get things filed for you quickly. Another thing a lot of companies are doing are keeping that kind of weekly cash flow. So a 13-week cash flow is 3 months. It's going to help you plan out the next 8 weeks, right? And especially what I take into account is when are your payrolls going to hit. Remember, you don't want to come to the end of that 8-week period and leave some of that forgiveness money in an accrued salary expense, right? You want to go ahead and make sure that you're planning that in advance, and you may have to do an early payroll to make sure that you meet the definition of incurred and payment, okay? Keep that weekly forecast up to date as you go through this 8-week period. Been kind of interesting over the last 3 weeks. We're dealing with banks and dealing with customers and working with these SBA loans. And as you can probably tell, it's just been a rush to the banks to get the money. And so hopefully, if you haven't received your funding already, you are already set up with the bank or lending institution for the next wave of these PPP loans, because those, I think, once it passes the House, they'll set it up and probably will start that next wave here, hopefully within the next few days. All right, we've gone through a lot of details, a lot of good best practices. Scott's got some great partners throughout the Haney organization. And so don't hesitate to reach out to your Haney partner. And Scott's a great resource for you guys also. And Caitlin's got some questions for us that have come through the chat. And let's go ahead and let's start answering questions and hopefully get some answers for you.
Caitlin, just before we ask that first question, thanks. Do I have feedback?
No, you're good.
We just want to make sure that everybody's aware that on this, we have some profitability analysis tools. We have some cash flow analysis tools. Right, you have this money, and in theory, everything's going to be back to normal in 8 weeks. Because that's the amount of money that we've received. So the government thinks everything's going to be fine, but that may not be the case. Specifically in specific areas, this may take a longer period to get through. Hopefully it's not, but we can't predict the future right now. A further analysis of what to do with this cash and what to do with the disaster loan cash, if you applied for that as well, maybe needs to be looked at. And we have some tools available that we can help plan, what are we going to do with this cash? How are we going to make it through maybe the next 12 months, not just the next 8 weeks? So if you're interested in that, the contact information's on the screen. Reach out to us, and we have a team in 5 states that will connect you with the most appropriate person. Thanks again, Chris. Okay, thanks, Caitlin. Go ahead.
Awesome. Thank you guys. Great presentation. Just so everyone is aware, we have had over 150 questions in the chat. And so unfortunately, we will not get to all of them. However, I will communicate with Chris and Scott and we'll do a live Q&A later on to answer all these questions, or we will answer them out and send you a document. So if your question is not answered, we will make sure to get it taken care of. You can also, like the contact information on the board, reach out to us individually and we'll make sure we get you taken care of. There were some very specific questions too. So with that, I will jump into the first one. There's something that I want to just say that I can kind of put in a plug. A lot of people asked if there's anyone that can help them through this process, that can help them be prepared. That is actually what we at Now CFO do. We work as outsourced professional CFOs, controllers, and any accounting staff that you might need. So if you are confused or need any help, we are more than happy to help you. We've done discounted rates due to this situation to help out our clients that we work with. So if you are worried about that at all, I had quite a few questions about that. We're more than happy to help. Second, yes, we will be sending out these slides. We will be sending you the recording. It usually takes a couple hours to process through Zoom, but we will get that to you before 2 p.m. So you should expect it before 2 p.m. Mountain Standard Time today. We will get the slides and the recording to you. Okay, let's get started. So I had a lot of questions asking about the 8-week period. Chris and Scott, can you confirm that as soon as money is in your bank, the 8 weeks start?
It is as soon as the money hits your bank account. One piece of that, Chris talked about payroll being incurred and paid. So everybody's been so anxious to make sure it's in your account. You're not really worrying about when it's hitting your account. But in theory, if you receive that money in the middle of a pay week, you're going to have to do some accrual for your reporting at the end of the 8-week period. So ideally, if you know the money is coming and you can coordinate it with your bank, I would say have it deposited into your bank on the first day of the new pay cycle. That's just going to make the calculations that much easier.
Okay, great. Thank you. Okay, here's another question. Can I temporarily hire employees for the 8-week period in order to get my employee count back up?
Absolutely. Absolutely. That's part of what is being encouraged right now. There are a lot of great people that are unemployed. Absolutely, that will count. And you can pay your employees more as well if you need to get that amount up a little bit to make sure it's all forgiven.
Awesome. Okay, can you do some more confirmation or just restate everything that is forgiven as far as utilities, some things that I had specifically that people asked. So internet, parking, does that include employee paid parking with transportation, phone, gas, water? Can you just review everything that can be forgiven under the utilities category?
Yeah, so utilities is pretty broad. There's been a couple different interpretations of it, but think of monthly working capital payments that you make every month. And so if these are expenses that you do every month, so think phone, water, power, electric, gas for heating, transportation, that can be if you have monthly expenses for your gas or fuel or other kind of consumables. If you're paying monthly for parking or you're giving everybody a pass for the HOV lane every month, if you can show that you were paying that in December of last year and it's one of your monthly working capital expenses, I feel comfortable that you can take that as one of your expenses here in this 8-week period, okay? So make sure that it's something that was already in place as of February 15th. And so think, gas and fuel that you're doing on a monthly basis for all those company vehicles, or I've seen bus passes for for employees or parking for employees to help them in their transportation, as long as it's been one of those monthly expenses. So for example, if you've never paid for parking before and you show that in the 8-week period, I don't think that's going to be a substantiation enough for that.
Specifically, yes, internet is
And internet, yep.
eligible. And secondly, all of those costs that Chris just spoke about will be maxed out at 25% of the total loan that you received. So yes, it's all eligible, but only up to 25%. The remaining 75% is for payroll and payroll only.
Thank you. That would include like stipends for telecommunications that you give, like a stipend to employees for phone bill, right?
That's a monthly expense of you having that office, and even if it's for an employee for that home office, I would go ahead and include those.
Okay, if I think this person's very fortunate, but if I'm making more money than before, am I still able to receive the forgiveness?
If you've had the PPP loan and you've had it funded, and you're now having a great year, if you've had that funding and you're paying more out in payroll, I mean, you should be able to get that forgiveness. As part of the loan application process on the PPP, you do have to say that you've been damaged by the coronavirus. It's a very broad piece. Most companies that have done the PPP is, they've been damaged because their revenue's gone down, or they are not able to keep as many people employed. But if you're having a great year and you pay more out in payroll, that's really what the federal government wants you to do right now, right? They want to forgive these loans, and you just use that in your forgiveness calculation.
Yeah, congratulations. The key to what Chris just said there is just don't forget to check the box that you were damaged. Now, even though you're having a great year, you may have been having a better year if the coronavirus wasn't here. So the government has said every American has been affected by this, and the disaster loans are specifically eligible to everybody because everyone has been damaged. So just take a look at your business, and even though you're doing great, could you have been doing better?
Thank you. Another question. So if I am a single employee, or my home is my office, a specific percentage, 30% of my house is used as an office, can I deduct that amount of my mortgage and utilize that as the rent?
Well, that's going to get into some gray area, and I'm in that scenario. I'm assuming you're talking about you're a sole proprietor filing on what we determined was the Schedule C earlier. In that scenario, I don't know if you're paying yourself a payroll check or not. I would have advised you before this not to pay yourself through payroll, but to take distributions. And if that's the case and you're taking distributions, it goes back to your net income number multiplied by 8 weeks divided by 52 to receive your average amount of forgiveness. Now, that's going to take profitability. You want to show profitability, not necessarily more expenses on that Schedule C. Now, that goes against normal tax planning, but so forgiveness purposes, you want to show profitability. For tax purposes, you want to show the rent is being paid. So it's a little bit of a gray area on which way you want to, what you're trying to do, and that might take kind of a one-off phone call with us.
Okay, Great. Okay, here's a question about how you should receive the PPP funds into your bank account, or how you should receive them into your books. How do you calculate that? A couple people mentioned that they were deposited right into their business checking account. How should they account for those in their books?
I've seen a couple of companies that the banks actually set up a separate account, and I've seen some banks will just, deposit it into their operating account. Some of the banks that are having them set up a new account is kind of like, great, I've got a new account, now I've got to go order checks. And by the time I get the checks back, I'll be 6 to 7 weeks in my 8-week period, right? Before I can even cut a check. So actually that's pretty good. What I would do is at that point, separate it out. I would set up a current liability for the note. So put a PPP note, because you'll make it a current liability, because the goal is you take out the loan right now here in April, and the goal is by July or August is you have it forgiven, right? So it's in and out with under 12 months. So it'll be a current liability. Just track it, make sure that you have a good track for all of the expenses you put against it. If you want to, and you have the wherewithal to set up a separate account and run payments against that separate account, I would go ahead and do that too. That just shows another separation. But make sure on your books, whether you're using QuickBooks or Sage or NetSuite, set up separate accounts for the loan for it. And then also when it's forgiven, you'll want to run that through other income, other expense below the line as forgiveness income.
Thank you. Okay, first question I have, this is kind of 2 parts. Unfortunately, my business bank has said that there's little chance that we'll make it to the top of their list. They had over 3,000 applications and suggested I file elsewhere. Any recommendations on where I can file?
We work with every bank, Chase, Wells, KeyBank, all fantastic banks. What we've realized through this process are the smaller banks that are a little bit more nimble have a much better ability to get this done. I'll throw out a couple names. The Live Oak Bank has done a really nice job. Celtic Bank has some capacity. The credit unions, kind of the larger but small credit unions like Mountain America or America First, have been doing great jobs. We've seen these not the larger multinational banks doing a much better job in getting things done much more quickly, just less red tape. So if you can kind of think in that smaller state or regional type area, those are the banks that seem to be doing a good job. I would say go apply it, 3 or 4 of them. The SBA is only going to give you the money once, but you need to make sure you get it. So don't worry about offending your banker. Go apply as much as you can. And I think most of these loans are really set up with an online forum. To make it to the top of the list, it's easier if you have a relationship. But if you go to one of the smaller banks that maybe has excess funds available, they can turn that around for you more quickly.
Yeah, I'll echo that, Scott. I know that for many of our clients, if they had a good banking relationship, they could go straight to their banker and help get their application processed, because there's a couple of larger banks and regional banks that have set up an online portal, and you have to apply and then you just don't hear anything. I've got one bank for a client, they send out an email every day stating that it's in process, but they don't know and don't rely on them, and you may need to go to another bank. There's also a couple of online portals that have opened up here in Utah. DiviPay has started processing online, and it's an easy process. So if you haven't had luck out of the bank, or maybe it's not a large triple P loan. I've done a couple that have been as low as 10,000, and I've seen some, for 2.5 million. So even if you're a smaller one, you may want to go to one of those online portals like Divvy.
Thank you. So I think you answered this next question. You said, so someone mentioned, we've already received our triple P funds. The first round, are we eligible to apply the second round as well?
No, this is just additional funds for the people who were not able to get it. You've already maxed out your eligible amount. You've received that, so you wouldn't qualify again because you've already taken those funds.
Okay,
Yeah.
perfect. Thank you. Great answers on that one. Okay, the next one's going to talk a little bit about things that payroll expenses. So for example, does that include retirement contribution? Can those be included?
If it's paid, remember, paid and incurred is the key. So if you make, Chris kind of talked about this a little bit as we're measuring the 8-week period, and maybe you don't make that contribution till the following quarter on a normal time frame. If you want that to be eligible, make that payment the last day of your 8-week period. Same thing with payroll. Chris mentioned this earlier. If your normal pay schedule is a few days after that 8-week period ends, pay it a few days earlier. Make sure you get all the costs paid in that 8-week period, not just incurred.
Thank you. This is along the lines, there's the 100K employee salary limit as far as forgiveness. Is that the same thing with retirement? So is there a limit on retirement benefit contributions as well?
No, so salary is capped at 100,000. As long as it's for a group health term or a group retirement benefits, you'll be okay with, then there's no limits with those.
Okay, great, thank you. Are there any limits on who you can hire? So for example, if I hire my wife or my husband on a short term to get my headcount up, are there any limitations to things like that?
And I would say no, but my wife may not hire me as an employee. That's another conversation. However, no, there's not limitations. They do this is not specific to the PPP. This is just in general. Maybe don't hire an infant. Maybe you need to hire someone who has the ability to do the job. That's a regular guideline.
So they can be under the age of 18?
They can be under the age of 18, absolutely. Right? I mean, are they doing landscaping? Are they sweeping the floor? Are they scanning documents? There are a lot of things that youth can do and be very valuable to your organization.
Great, thanks. Just so everyone knows, I've received over 200 questions, so I didn't get to all of them, obviously. We're going to answer them for you. We will probably regroup and do a live Q&A. We did that earlier with another webinar we teamed up with on Haney, so we will do that. I think just for time, I can maybe ask one more question. Let me find I had one that was right here. Okay, can we include fees paid on to a third-party payroll service as payroll costs?
So if you're making your payroll through like an ADP or a PEO provider, it's only going to be those specific payroll expenses. So gross pay, commissions, not federal taxes. So your Social Security, Medicare, which is part of that total amount that's going through that third-party processor, are not included. And so, yes, as you're paying that as if you have a PEO or a co-employer, if you're paying that through that provider, yes, those can be part of the forgiveness process, but remember only the eligible costs, which don't include those federal payroll taxes.
Okay, thank you. With that, we are at our hour mark. I know that we did not go over all of the questions. We are going to regroup and figure out if we're going to do a live Q&A or if we will send you a Word document or a PDF with answers to all the questions. We'll get back to you guys on that. But if you have questions specifically, please reach out to us on our email. We're more than happy to set up a phone call with you and answer those. I know on Haney's team and our team, we've got great individuals who have answers. Thank you all. Chris, Scott, thank you so much for presenting for us today, and I'll turn it back over to you guys to send us off.
I appreciate it. Thanks everybody for joining. We know there are a lot of questions out there. Don't be concerned. Don't be confused of who should I call now CFO, should I call Haney? Just call us. We'll direct the question to the appropriate individual. And we're just here to help. We're here to help in a team setting. Please let us know how we can help. We received a lot of follow-ups after our last webinar, and we're just here to help.
Awesome. Thank you, Scott, and thank you to Haney for allowing us to put this on. And as Caitlin said, go ahead and reach out and we'll get your questions answered. We will be sending you out a copy of the slide deck. We'll also send out a list of all the SBA lenders in Utah and a link that will have a list to pretty much all the SBA lenders throughout the U.S.
Chris, we're also going to send a calculator so that you can, it's a simple calculator. We have a more complex version internally if we want to do some work together, but this will give you kind of a pretty good idea of where the money needs to go.
Awesome. Well, thank you all again, and you guys have a great rest of your Thursday, and hopefully tomorrow will be the start of a great weekend. Thank you all.